Good evening, students. Welcome again. We have started with the IAS number 2 inventories. We have discussed the basic concept, that what is the concept of the inventory, which items should be included in the inventory, which items should not be included. Then we have discussed about the cost and the concept of how it is calculated, then also the concept of the net realizable value, and then what are the comparison for that. So these are the basic concepts. If you remember, while calculating the cost, we have two different options were there. The first one was what? That was related to the first in, first out, and that was the first units that are purchased should be sold or issued first. And the other method that we are using may be a weighted average method. So both weighted average method and the first in, first out method, both are allowed by the International Accounting Standards. So, but here first we are discussing the first in, first out method, and with the same values, with the same you can say the inventory, we will also calculate the weighted average method in the next lectures. So here the concept that we have to calculate the inventory, we have two different options available. The last in, first out method is also available, but that is not allowed by the International Accounting Standards. So we are just focusing on two methods. So we have an inventory, we have a opening stock, we have a more purchases, some issues are there. So how to deal with that and how to calculate the value of closing stock by using the first in, first out method. So this is the basic concept in this main lecture. Now, if we see here, we have almost like four transactions are there. The first one obviously is the opening stock. So opening stock of this organization is how much? That is 30 units, and 1 unit worth is $4. Then after that, on the 2nd of January, they have purchased some units, then they have issued some units. So issue here means there are two options: issued to the production line by the store, or it may be issued to the customer, mean as a sales. Both we can consider. Then again they have purchased some of the units, then again they have issued some of the units, like 3 or 4 main transactions are there. How to deal with that, and the method is the first in, first out method. Here we are using again the perpetual inventory system. Perpetual inventory system, as we have discussed in the previous lectures, what is that? That every purchase and every sale, mean every receipt and every issue should be recorded. Even a 1 unit they are buying and even a 1 unit they are selling or issuing, all should be recorded. Mean they should not miss any unit. Other method is the periodic, that we have already discussed, but here we are using the perpetual inventory system. For perpetual inventory system, we need an inventory card. Inventory card has basically the 3 main sections or the head. The first one is related to the receipts. So all the receipts will be recorded here. Then we have a section of the issues, then any sales, any issue will be recorded here. And then we have a balance section where all the balance, the remaining units will be recorded. And obviously we have all this thing in the chronological order, the date wise recording is there. So we have mainly 10 columns here, 3 columns for the receipts, 3 columns for the issues, and the 3 columns for the balance, and the first column is for the date. So in total we have a 10 column. The same inventory card will be used for the weighted average method, so it will be same, there will be no difference in that. Then in each column, with respect to the receipt or the issue or the balance, we again have 3 columns differentiating how. First we will write here the number of units, then what is the cost per unit, that for every unit what is the cost, and then we will write also the total cost. Means if we multiply these 2 columns, we will write the total cost. So the same 3 are in all the sections, in the receipt section, in the issue section, and also in the balance section. We have 3 columns individually: the units, the number of units which they have, what is the cost per unit, and what is the total cost. We just start with the first in, first out method. It's the very basic one. We have 30 units. The date, obviously we will write here the January 1st. They have units, and obviously it is not a receipt, it is not an issue, it is what? It is the opening stock or the opening balance. So we will write it here. So how many units we have? We have 30 units available, and 1 unit is how much? That is $4. So it means the total cost of these 30 units, means if we simply multiply this, it will be $120. So this is the $120 opening stock. This is how we will record the opening stock or the opening inventory or stock at the beginning of the year or the period. After that, what we can do, we can simply draw a line to differentiate that this transaction is complete, the recording is over. Now the next thing what they have done, they have purchased units, 50 units, and 1 unit is for $5. So we have a receipt, purchase, issued, and the balance. Obviously we will write this one here on the January 2nd. Units, how many units? 50 units, 5, so it will be $250. So how we are calculating here? 50 units are there, 1 unit for $5, so it will be multiplication and it will be 250. So here, when we will write in the balance, we will write it separately because we have to know that how many units at the price or the cost of $4, how many units at the $5, $6, $3. So we have to differentiate according to the receipts or according to the balance available. We have to write the number of units. So here we have to write these units same as a balance 4, that will be 120, and then again we will write how many units? 50 units, 5, 250. So this transaction is also complete. So this receipt section is also done for the first one. Then on the 5th of the January, they have issued some of the units. Issued means issue maybe to the production department or it may be issued to the customers, means as a sale. So issue or the sale. So how many units are issued? They have issued 40 units. Now there is the point what we have to consider. We have to first of all write it in the issue section where the issue sale section, but we have to write the 40 units. Now the point is either these 40 units are issued from these 50 units or these are issued from these 30 units. We have a balance here. We have a balance of 30 units at the cost of $4 per unit, and we have other units which are purchased later on at the $5. So 50 units are separate. We have a 30 units here at the $4 and the 50 units also at the $5. So we have to issue. So now it will come here the concept of first in, first out, means the units we are receiving first will be issued earlier. So the first unit which we will receive, they will be issued earlier. So we need to issue how many units? We need to issue 40 units. So first we have to use all these units, and if these units are not enough, we have to move to the other units. So issued, obviously we need 40 units, but here we have how many? Only 30 units are there. So we will issue here 30 units at 4, so it will be 120. But again, we have to issue more units. How many units we need to issue? 40 units. Until now, from this we have issued only 30 units. So we need 10 more units. So 10 units will be issued from this stock. So the cost is 5. So it will be 50. So this is the issue section. Now the balance will obviously change. So how balance will change? Because we have 30 units, all units are issued. So here we have no more units at the cost of $4. But from here, from 50 units, we have issued 10 units. It means we have almost like 40 units are available. So that 40 units will be the balance. Obviously, the cost is 5. So it will be $200. So this transaction is also complete in this way. So here, if you see, this is the main concept that units are purchased. They are recorded accordingly. When they are issued, we have to see that which units were purchased first. The units which are purchased earlier will be issued first, and after that, if we have a 2, 3, 4 categories of the units according to the cost, then it will be considered. One more thing that is very important, we are not considering here the sales price, which is the for the trading business. We are only considering the cost, because here issue at cost, receipt at cost, and the balance at cost. We are not considering the sale price. That's why even we haven't mentioned here that what is the price of the unit. If it is a trading business, so they will be issuing mean they are selling 40 units. So, but at which cost, at which price they are selling, it is not our concern here. Obviously, it will be recorded when we will consider the cost of goods sold and the sale price and the gross profit, but here we are only considering the cost for the closing units. Now again, on the 10th of January, they have purchased 60 units. Obviously purchase will be written here, 60 units at 6, so it will be 360. In the balance, we have a 40 units already available from the previous stock, from 5, 200, and then 60 units here, so at 6, so it will be how much? It will be 360, and then again this transaction is complete. Now the last transaction, the 12th one, we have issued the 70 units, so they need 70 units. So they have a two type of the units, or two categories of the units, one at the cost of the $5 and one at the 6, but they need 70 units. So first priority will be given to these 40 units, and if any more units are required, so it will be used from these units. So here we have to issue 70 units, but here we have only 40 units. So 40 units from here, so it will be at 5, so 200. But again, we need how many extra? 40 here. So from here we total need 70 units to be issued. So 30 units more we need. So it means it will be issued from $6, so it will be 180. So if we look at that, 40 units were there, 40 units issued, means the balance is nil. From here 60 units were there and we have issued 30 units, so the balance will be 30 units at the cost of 6, so it will be how much? It will be 180. So this transaction is also complete. Now what is the purpose of all this calculation and all this? Because we want to know this. Basically this is the main thing which we need to calculate. What is this thing? At the last of the month, for example, we are considering there is no more transaction after this, so on the 12th of this month they want to know the value of inventory, the value of the closing stock or the merchandise. So they have how many units? They have a 30 units, and the 1 unit cost is how much? That is $6. So it means the value of the closing stock is how much? That is $180. So this is what? This is the $180 is closing stock. So this is the thing that what we are calculating. So it is $180 is the value of the closing stock at that specific date. So all the receipts are here, all the issues are there, and the balance after every transaction is there. So what we have to do, we have to consider there may be like some units issued, some receipt. So this is the basic concept. There is a possibility obviously that the company may have a sales return, or they may have a purchase return, or even they have issued to the production. For example, here they have issued 40 units, here they have issued 70 units, they have issued to the production, or they have issued to the customer, and there is a return. Or there is a possibility when they have purchased like a 50 units they have purchased, or 60 units they have purchased, so they may return it to the supplier. So the purchase return and the sales return or the issue return, there is a possibility is also there. So what we have to do in that case, simply we will write, if it is a purchase return, we will write in the purchase section but with the brackets. For example, they have issued means to the production department, or they may be issuing to the customer like a sales. So they may be issuing, for example, 10 units is returned, like a sale return is there. So how we have to write, if the 10 units they are issuing, obviously the units they are issuing, and from that some of the units are still returned by the customer. So in that case we have to write it what? We have to write it in the issues but in the bracket. For example, the 10 units are here, so 6 is there, so it will be 60. So here the closing stock, obviously after that, for example, this is happening on the 30th of the January. So in that case they have a units, they have, see the price, what is important here, the cost, what is important, this is also 6, this is also 6. So 6 is same, that's why we will write in the same way. So we have 30 units here and the 10 units here, so it means it will be 40 units at 6 and the balance will be $240. So $240 is what is the closing stock, because some of the goods which we have issued is returned by the customer or returned by the production department to the warehouse. So in that case, when we issue, normally the goods are decreasing. If you remember here, issued 40, so it was 0. From here 60 unit, 30 were issued, so it was a balance 30. But here, because it is a bracket or it is a negative sign, so this issue, when it is returned, it will increase the number of units. So it will be 30 and 10, it will be 40 and 6 is the cost. So we have a 240 as the closing stock. So the same thing will be for the purchases. If we are purchasing something and then we are returning it to the supplier, in that case what will happen, again, like a 5 units, 10 units, 20 units, whatsoever units we are returning to the supplier. For example, on the 31st, the 10 units that we have received here from the customer or from the production house due to any fault, so we may return it to the supplier. So in that case, obviously the cost is 6, so it will be 60 in the bracket. So here again it will be, the balance will be 30 units, 60, and it will be $180 as a closing balance. Why? Because here we have received the units, but now we are returning it to the supplier, so it will be decreasing from the total units. So in this way we can write all the receipts here, purchases here, or the purchase return here, all the sales or the issues, or even the sales return or the receipts issued that we have received back from the production department in the warehouse. And here, after every transaction, we have to write what is the balance available. So in this way, all the transaction will be completed. So on this month and 31st of the January, we have 30 units, and all units are with the cost of $6. So the total value is 180 units. So this is the basic concept, that how first in, first out, means the unit which we have received first will be issued first. So from this 30, 31st, and then from this 50, 10, and in the same way. So whatsoever units you are receiving first, for example, 5 days back, 10 days back, so which will be issued first, the 10 days back. So which is the earliest purchase will be issued first, and then the balance will be in the same way. So this is the concept, how we are calculating the receipts, the payment issues, and also the balance. And why we are calculating? Because we want to know what is the closing balance. From this also we can calculate that what is the opening balance. If you remember here, the opening balance or the opening stock was $120. All the purchases are recorded here, and then the closing balance is there. From that also we can calculate the cost of goods sold. So this is the overall concept of the first in, first out method. But still, if you have any doubt, if you have any question, you can ask me in the comment section. And the same question or the same transaction we will do with respect to the weighted average method in the next lectures. I hope you have understood it. Thank you very much.